Hey, this is Matt from InvestiQuant. Today is Thursday, January 7th, 2021, and once again, we have another strong day in the markets. The markets gapped up this morning and pretty quickly took off to the upside. We are holding up above recent highs here in all of the instruments, and what I want to do this afternoon is take a look at this strong type of action taking place ahead of tomorrow's non-farm payrolls report. So we're trading up above yesterday's highs, and the non-farm payrolls report is tomorrow. Those are two pieces of information that we can take right out of Discover and test. So let me go ahead and set that up here in Discover, looking at all four instruments. The setup we're going to use is an intraday time-based setup that will get long at 3 p.m. Eastern Time. It's going to exit at the close, which is 4:15 p.m. Eastern Time. Now, the way I want to describe this is I just want to go into this post-open filter section, and this is a section that will allow me to say that at 3 p.m. Eastern Time, the market is above the prior day high. So all I got to do is come down to this bottom left category and select equals next to greater than prior high. That'll mean the price at 3 p.m. is above yesterday's high. Next, I want to go into the market events section, and we've got all kinds of different market events that take place on a regular basis, all the higher tiered reports like the non-farm payrolls report. And we also have the day before and day after those events as well. So we've got different ways to test those events. And what I'm going to do is I'm just going to add this day before non-farm payrolls report to the test. And then lastly, I'll put it in a similar bullish market environment where we are above a 10, we are above a 200-day simple moving average. And now I can click view results. And here we go. These are the results of what has happened historically when you go long at 3 p.m. Eastern Time if you are trading above yesterday's high, and tomorrow is the non-farm payrolls report. This is taking place above a 10 and 200-day simple moving average. Now, historically, we've got 39 samples in the S&P, we've got 42 in the NASDAQ, 35 in the Dow, and 38 in the Russell. If we take a look at the win rates on these, we're seeing that the S&P is coming in at 59% winners, the NASDAQ all the way up at 69% winners, so quite strong there. The Dow, 63% winners, and the Russell, 61% winners on this. So all four of these instruments, pretty similar win rates, hanging somewhere around the low 60s mark on average. And that is simply telling you that about 60%, a little bit above that on average, of these have closed above where the price is at 3 p.m., assuming that the pattern is true at that time. And then if we look at the average win to average loss, they're fairly similar in size here for the S&P, the NASDAQ, the YM average loss a little bit bigger, and the Russell fairly similar in size as well. So I don't see a big skew either way. I mean, they're not exactly the same, but they're all in the same ballpark as far as average win to average loss. But it's really a win rate thing in this one, where the win rates are skewed more towards the upside, with NASDAQ being the strongest. The NASDAQ is that orange equity curve. If you are staring at the charts here, if I just highlight in Q here, you can see the equity curve on that, which has been stronger than the others, which are a little bit flatter on those equity curves. But overall, stats have favored the long side a little bit with this scenario. So hopefully you found it helpful. Good luck the rest of the day, and we will see you in the morning.